And Jason Wright from Essential Property Management. I'm here in South Australia and I thought I'd update you on our market. Lease renewals at the moment, almost everyone is renewing. We're still seeing a huge increase in rents, so minimum $20, but for the most part, somewhere between $50 and $70 per week. The only locations are in a city where we're seeing the market slow down a little bit because of that student accommodation. So I've had a property for rent in the CBD for about 18 days on market, and that's the longest I've had a property on the market for longer than I remember. Average time at the moment is more like 4 to 7. We're not doing open homes, as I've mentioned previously. All we tend to do is virtual video tours, pre-apply online, and then leasing by private appointment only, but still getting 80 to 100 inquiries, which leads to 50 to 70 applications per property. The other big factor in our market at the moment is I've got about 15 interstate investors actively looking to purchase here because the yield is fantastic in the sub 400, some in the 500, and we just can't get them stock. I just can't get stock quick enough for these guys, and if I did, it would be rented tomorrow. That's the state of the market here in Adelaide, which is still crazy good, which I'm loving. And I'm going to hand over to Tamika in Tassie.
Thanks, Jason. I'm Tamika Smith from Key2 Property in Tasmania. We predominantly look after the north of the state here, and we're still experiencing all-time low vacancy rates of just over 0%, which is great for investors, I suppose. We've actively got 378 tenants that are looking to move into a property within the next 12 and only 117 available properties in our marketplace. So we're really needing investors to buy down here and fix some of that supply and demand issue. Lease renewals is a 98% take up at the moment, with rents on average up about $40 a week, which is fantastic. Within 24 hours of properties going on the market to rent, we're seeing around 50 inquiries, which again is unheard of in our market, which is great. The sales market has been really buoyant here, but we're finding it is settling. We're finding a happy medium here, and for investors that are buying, we're looking at about a 4 to 5% return on investment, which is good for this market. So yeah, now's a good time for investors to look to buy in the north of the state, particularly good return on investments and fantastic tenants looking to rent. That's it in a nutshell for Tassie. Over to Mel in Victoria.
Thanks, Tamika. Hey there, guys. Melissa Hickson. I am the Director of Prime Residential, and we are in Melbourne. So Melbourne has been quite good as of late, which is really, really great. So we are now finding that obviously private inspections we don't need to do private inspections anymore. We are now able to do open for inspections, which is really, really great news for our marketplace. Obviously, throughout our most recent lockdowns, we were not able to, first of all, do inspections, and then we were able to do private inspections. That is now opened up to public open for inspections. So really, really great news for our marketplace. Within my core area, the vacancy rate is sitting at around 3%. So we are a little lower than what we have been in the last couple of months, which is really, really good. The Melbourne inner city market is still sitting around that sort of 8.5%. So that's been fairly consistent. However, what I am finding at the moment is there are actually people that are wanting to move to Melbourne, which may surprise a lot of you, but that is what is happening. So that's really, really great news for our marketplace. So once things are starting to open up, everyone's going out, and the vibe's back, and I'm just hoping that things will start to pick up, and I'm sure over the next couple of weeks we will find our market really, really lift. So it's really, really great news for us Victorians here. So in terms of like lease renewals, we are finding that most of our renters are staying on, which is really, really great. No real major rental increases, maybe $5 to $10 per week, but owners are being very conservative with that as well. And we're also finding that with our inspections, we're starting to get people come through our properties. Anywhere between sort of 3 to 5 groups is fairly average, but inquiry levels is definitely starting to pick up. So great news overall for Victoria, and hopefully next month I come to you with even more better news with things picking up in Melbourne. So let's go over to Corinne. Over to you.
Thanks, Mel. My name is Corinne and I'm from Ray White in Beenleigh, and we service the South Brisbane area. we have been very lucky in Queensland. We've seen a very strong rental market over the last, I'd probably say 6 months. Something that really stood out to me today when I was having a look at the statistics is that the average rental for the 4207 postcode in which we predominantly work has increased in 12 months from $378 a week to $419 per week. So, you know, I thought that was really good. We have seen, though, however, the rental yields haven't risen because the house price is obviously selling a lot higher than what they were a few months ago, but the rental yield in that postcode is still sitting about 4.7%. The vacancy rate, however, this time last year was at 1.1%, and it's still sitting around that 0.6 to 8%. So the vacancy rate is still quite low. We average maybe 3 properties available for rent at any given time. So, you know, we lease one comes back on. Steadily, we don't really have any more than that available. We do see anywhere between 50 to 115 inquiries per property, which does result in multiple applications and giving landlords the choice in tenants as well. The days on market are still sitting between 4 to 5 days between going online and having an approved application and a move-in date. And we're still only seeing about $20 rent increases per week, which I think has been quite reasonable across the board. It hasn't really increased much from our perspective in our office during COVID. They've been still quite conservative, and we have noticed that pretty much majority of our tenants up until the start of next year have renewed on their leases. We've had maybe 1 or 2 say that they need to relocate. So overall, still really good, strong rental market. And yeah, we're really happy with how things are going over here. So I'd give it over to Tara, who's also in Queensland.
Thanks, Corinne. Tara Bradbury here from Active Agents in Hervey Bay, where it is a stunning 25 degrees here today. I just thought I'd give a shout out for our beautiful state. It is still rather busy though. It is crazy. And we are finding that our lease renewals, if I kick off with that side of it first, our tenants are certainly very excited to have the option to have a lease renewal, because we do still have many of our investment properties that are hitting the market and selling to owner occupiers. And that's part of the trend that we're seeing during this year, and possibly will still be the same next year as well. The lease renewals that we have advertised and marketed the properties throughout, probably from 2019 to now, we're seeing anywhere from $5 to $10 rent increases. But ones where we're taking them on and then re-renting them to new tenants, some of these properties are having significant increases where they've been rented 3 to 5 years ago, and they're seeing now anywhere up to $50, $60 a week rent increases on their properties because they haven't had those increases in the past. So it is really important to make sure that you do reach out to your agent, ask those questions to find out where you are genuinely positioned. With our vacant properties, we are at 0.2, 0.4% vacancy rate at the moment. We have huge tenant inquiry, very similar to everybody else, where each property has anywhere from 25 to 30 inquiries on it. But one area I really wanted to point out today in our update is that this is the prime time for our hospital, being the private and public hospital, to have high staff changes. And we have a list already of 18 families which need to be housed between December and January. And we're slowly putting them into properties, and those listings aren't even going on realestate.com or any other property portals out there. So if you have considered purchasing an investment property or putting your house up for rent, you certainly will find that you'll be able to get the premium return in this current market, just as we've heard in many of the other states as well. It is a bit of a tough one for investors in the buying side of things. In a sense, the rental yields aren't where they were 12 months ago. But what we have noticed is we've had a few investors come through, an investor buyers agency that we work with, where they've picked up properties that do need renovations. We've got a great group of trades that have gone in, repainted, new floor coverings, and then that's actually added anywhere from $40 to $60 a week rental return for them, and an increase, which is then going to cover that investment that they've made on those properties long term as well. So if you do find that there's something that needs a little bit of work, we do have a really good relationship with our trades. There are still delays like everywhere else. The trade shortage is tough, but thankfully the teams that we work with, they do prioritise our work, which is really handy for investors out there. And then on the sales side, we are purely property management, but we have seen a 20 to 25% increase in sales listings in the region, which is massive. So certainly a great time for those who are selling in Hervey Bay. I'll hand over now to Ashley over in Perth, WA.
Hi, Ashley Goodchild, to give you an update on the Perth market. So this month, or for October, we received 93 applications for 13 properties. So that gives you an idea of the number of applications per property that is coming through, which is still quite high. The average days on market is sitting around 5 days. And we have also found, like Corinne, that our average rent has gone from around 375 now up to 445. So quite a big drop with that. We are still seeing that there's a couple of landlords in the market that are throwing on really high prices and just trying to take advantage of the market. So we try to educate and say that in a suburb where there's a high demand, there is generally maybe only 2 to 6 properties available for rent in there. What's happening is some owners are seeing that and throwing on a cheeky price, but they're not able to lease the property for that. So that's just one thing that we're seeing in the market. But overall, there doesn't seem to be as much stress in that people aren't prepared to overpay for a rental property. But there is definitely a lot of people still looking, but I guess they seem to still be safe. Like they have got options where it's becoming more of a choice to move as opposed to a forced move. So hence the chaos is not there as much, which is good to see. The lease renewals still sitting safe at about $20 a week. But one of the annoying things that I'm finding is if there are landlords that have sort of always looked after tenants and never done a rent increase, they're now wanting to do a big increase and bring their property up to the market. So I had one the other day where the owner wanted a $200 a week increase on the rent, and I thought maybe she might have done a typo and was meant to say $20, but it was $200, and that was because there was no stock available in the suburbs. So she thought that she could do that, and she was probably right. The market does allow for a $200 a week increase, but morally, I don't feel that's the right thing to do. I would rather see her have put regular increases in along the way. And that's my tip for landlords that have got maybe a tenant that is under market, where you have been hesitant. Just start now doing smaller increases to catch up so that you're not too far behind and want to go and do something silly like that. So otherwise, the Perth market is still going quite strong. Would be good to see some more investors come into the market, but we're seeing that confidence interstate, but it would be good to see the local landlords wanting to start purchasing as well. I'd like to see that. Heading over to Ash Merlo in New South Wales.
Hi there, Ashley Merlo from the Property Collab over here representing New South Wales, and primarily today chatting to you about the Northern Beaches and North Shore of Sydney. So in comparison to month on month, we've actually seen a 0.2 decrease in our vacancy rate. So currently sitting at 1.3%. Personally, in terms of our portfolio, we have 100% occupancy across our entire portfolio. So when it comes to the leasing aspect, we are finding that properties are generally only sitting on the market for 2 to 3 days if they aren't being leased prior to that. That's if they're obviously, they present well, they're marketed well, and they're also priced competitively. So we are finding out there at the moment, we do have a lot of people moving into our particular marketplace from out of area, and it's just age-old supply and demand. So we just quite simply don't have enough properties on the market and more people moving, which is resulting in us achieving premium rents. In terms of those rents, it similar to Tara over there in Queensland, very similarly, if a property has had a tenant in place for quite some time, those increases, the rents may be a little bit below, quite below market value. Any properties that have been leased in the last 12 months, we're finding that there may be sort of anywhere between $20 to $50 per week as an increase. However, the same as Ashley just mentioned with that client over there in WA, we've recently had an increase on one of our properties for $200 per week. It was about $210 to be precise. So we actually had some pretty big legislation changes here in New South Wales last year where we can't do incremental increases anymore. We can only do one every 12 months. So investors are obviously looking at their portfolios and making those judgment calls based on what's happening in the market. In terms of our leasing numbers, we've got two markets. So we've got apartments and homes. When it comes to apartments, that is still going quite strong, but not as strong as housing at this moment. We're getting anywhere between sort of 20 to 30 inquiries on our apartments. But when it comes to houses, I had a property on the market last week. We ended up fetching about $250 a week above what I originally thought would be able to achieve for this home. And we had 67 inquiries in 3 days. So when it comes to houses or townhouses, they are in really high demand, especially for lifestyle properties. So those ones with like a lush level lawn or a pool, there's just quite simply not a lot locally. We do have a few properties coming to market in that caliber. We're finding that whilst they won't necessarily be long-term investors, we are finding that people are now purchasing these homes that they plan to move into at some point. So we're now sort of leasing those for 12 to 18 months and then at what point that those investors will then look to move in. But across the board, we're seeing our lease renewals, majority of like 90% of our tenants are taking up the option to renew and staying put. And those that are moving, they're either looking at upsizing or moving out of area, just given lifestyle changes of COVID. So locally, the market still remains incredibly strong, which does give, the opportunity to fetch higher rental returns and be able to, not sacrifice on the quality of tenants. So thank you. And that's us for today.
Hi everyone, Jo here from Now Leasing in Darwin. October's been a really busy month for us, surprisingly. Typically it's quite a sluggish month given the change in weather and the heat, but it has been really, really positive. We're still seeing really good growth in rents. They're steadying out a little bit though, and we're down to about a 15% increase for relets and a 5% for lease renewals. Vacancy rates though are still hovering around the 0.5 to 0.7% mark, so still really, really quite low. We are seeing an increase in new managements though from direct investor purchases, both interstate and local, which is nice, which we are expecting to help see a bit of a recovery with our market and the low stock numbers. The overall outlook is pretty consistent with what we've had recently though, so I would expect November to be much the same. We will likely see a surge in interest and lettings come early December before the Christmas rush, and then it'll quieten off for the rest of December before gearing up like normal in January, Feb to be one of our peak periods. Thank you.